The number one performing stock on the New York Stock Exchange today is Tribune Publishing. Shares are up 56% after Gannett made an unsolicited bid to buy Tribune Publishing in a deal worth $815 million. People may be slightly unfamiliar with those names, Jason. They are probably more familiar with the properties that these two companies own. And so think of it as the company that owns USA Today is trying to buy the company that owns the Chicago Tribune and the Los Angeles Times. And there are other smaller media properties within both of those companies. But this seems like, as we've seen with other industries in the past, this seems like one of those bids where Gannett said, here's a big offer. We want you to take it right now.
Yeah, I mean, it was definitely, it's a premium offer. We're in the midst of this big sort of media shift where just the entire media landscape is changing. And I think the big question today, perhaps investors need to be asking, is what's worth more, the information or the brand that is giving it to you? And I think a time ago, the brand that gave it to us mattered more in the days of the New York Times, for example,
the newspaper of record,
right? So you look at those names that hold sort of a lot of sway here, historically speaking. Those brands, those names really used to matter. Now, information is really just a commodity, and we can get it anywhere, pretty much any time, for very little, if any, cost, which puts all of these newspaper companies in a real bind. And so, I mean, we're seeing a lot of consolidation here. We see Warren Buffett obviously has been very bullish on newspapers in the sense that they are sort of the record of information for communities, for smaller sort of localities. Maybe not so much, maybe not as effective on a national scale because of the way that the media space has changed. But there are plenty of places around the country where you're not going to be able to get that kind of local information any place other than maybe a newspaper. That doesn't necessarily make it a great investment, but as we make this shift from paper to digital and all of these different sorts of properties that give us this information beyond just the names of the newspapers, I mean, I think that's something you have to consider. And if you look at the New York Times, this is a very interesting story here. Revenue over the past 10 years for the New York Times has been cut in half. And I mean, they've been trying to make this shift into sort of a digital model, which is, you could argue they were late to the game there, but it's better late than never. And perhaps they're able to do okay with that, but I don't know that I'd necessarily be holding my breath there. Again, I mean, I think it's just a matter of you need to be unique. You need to offer something that other people don't offer. And we were talking about this earlier before taping. It's everywhere from ESPN to newspapers and everywhere in between. They're all feeling this in some form or another today.
Yeah, it's interesting because I think that there are within the Tribune, you can look at Tribune Publishing, which is a stock that has been cut in half and then some over the past year since it got spun out from Tribune Media. And there are still within that business specific entities, and mainly I'm thinking about the Los Angeles Times that are making it. Like if you're Gannett, you're looking at this thinking, okay, well, we can get the Chicago Tribune and we can get the LA Times. And yes, we'll have some other smaller properties within that, but those are really the two that we want. And that makes sense to me. By the same token, as I said before, I think this is just we want to get this done as quickly as possible because, right, if you just look at the newspaper industry within the United States, Gannett has the largest market share. They got about 12%. And Tribune Publishing has about 5%. So this would just further pad Gannett's lead if this goes through.
Well, apparently they've presented this to management at Tribune Publishing, but they kind of shot it down. And so maybe this deal is a little bit more outlandish, over a 60% premium, because they want to go directly to shareholders. And as a shareholder, your shares are down at least 50% if you've been a long-time shareholder. Maybe you get a 63% boost and then cash out, or you're a shareholder of a bigger company. So this deal, I think, it was probably a little bit more inflated than what they originally presented to Tribune management.
I think they're going after shareholders, and I know they're going after employees at Tribune Publishing because part of the statement from the CEO at Gannett was aimed directly at Tribune employees saying, hey, we want you to be part of our growing empire, and there are going to be opportunities for advancement.
Yeah, I mean, think about the leverage they have there, because it doesn't take a genius to figure out that the journalism profession has taken a real big hit here. The data is clear in that there are fewer journalists today than there were a year ago. It's projected to continue on that trend as it becomes a less sustainable. It's just really difficult to make a living doing it, right? I mean, and again, it just kind of goes back to the internet has basically given everybody a voice, and that's great unless you made your living that way, and then it's sort of offered up some challenges. But again, I mean, I think you have to be a property that offers something unique, and so you look at Sirius XM Radio, for example. There was consolidation there. Sort of a unique way to distribute that content. I would make the argument that once Howard Stern is not a part of that business anymore, they're going to have a real problem. Luckily for them, they've wrapped up his content, I think, for the next 12 years, so that's good for them. Look at the Washington Post, right? Jeff Bezos buys Washington Post. Now you have sort of this property that he's got a number of different ways he could play that. I mean, he could make that part of the Prime relationship. He can offer that as just a very cheap digital subscription for Prime members or whatever. A number of different ways you can do it to make it unique. And so I think that's the key is we're going to see more consolidation. And again, I think they want to focus on having something unique to make them stand out, because otherwise you're just a drop in a big ocean.